Good evening, good afternoon, good morning, whenever you are. This is another part of the Become the cTrader Master and webinar. And today we are going to talk about the range bars. So today's, let's say, webinar will be directly connected to the situation with the interpreting and using the charts on the cTrader platform. Without any further ado, let's just switch to the markets. Let's just switch straight on to the cTrader. Let me just move the cTrader. Okay, let's just leave it here like it is. How to set your chart to the range bars, basically in cTrader. That's the most important question. You click on the dots. Let's say we are going to start with 1 hour standard candlesticks. This is the euro dollar 1 hour chart. Standard candlesticks are here. So let's now switch it to the range bar. So you choose the range, and now you have to choose the number of pips. Let's say we are going to choose 50 pips per bar. cTrader is trying to recalculate this situation, what we have passed to the servers, and there you are. We have a 50 pip range bars here. So what exactly is a range bar? Well, a range bar is a type of a chart that eliminates time from the calculations and only considers symbol price. The bars based on the price only, right? So no other time, no other data, not the time, not the other data can provide another way of viewing and utilizing the volatility in the financial market. So range bar charts can have any number of bars printed during the trading session, because during the times of the higher volatility, more bars will appear on the chart, and during the periods of the lower volatility, fewer bars will print. All right. So the number of the range bars created during a trading session also depends on the symbol being charted and the specified price movement for each range bar. All right. So what do we see here? Is a specific movement to the downside. As you can see, every bar here is a 50 bar movement. So you can see clearly, for example, here that we've been moving up like no tomorrow. Basically, this kind of a movement here means that we've been traveling uh, over. This is like a 200 pips. That kind of a amount is 200 pips. So we've been traveling from 1.400 over 400 pips here to the upside easily without any problem, right? And then of course we got some sort of the reversal, and since then we've been moving up and down, and gradually went towards the level of, let me just get my cross, somewhere around 1.0450 again, right? So as you can see, those sessions here were pretty violent, because we can see that the market was moving very uh, viciously to the upside. It doesn't mean that there is no time factor here. So we've moved 50 pips, the candle close. We move 50 pips, the candle is closed. We move 50 pips, the candle is closed. We move the 50 pips, the candle is closed. It doesn't matter if we moved during 1 day, 1 minute, or 1 hour. Just the range is this what matters here. Okay. So you can choose, basically on the cTrader, you can choose the volatility from 1 pip to one. This is 10,000 pips range. So plenty of pips to be choose from, and plenty of the range bars to be selected on the cTrader. So depending on your choice, your range chart will be built considering the respective number of pips. We chose the 50 pips because why not? That's the reason. Remember that in the range bar, all price bars are equal length. So again, if you set a 50 pips range bar, then all the bars in the chart are 50 pips range, high to low or low to high. The close of a bar is always equal to the open of the next bar, right? So you can see it here. We got the up bar. This is the close. This is the open. This is the close. This is the open. This is the close. This is the open. Right? In the same situation is here. This is the close. This is the open. This is the close. This is the open. This is the close. This is the open, and we go up. So that's, I guess, that easy. The range is measured as high and low and not close, of course. Yeah, the range is from the low to the high. In the other words, each bar has a high-low range that equals to the specified range. Each bar opens outside the high-low range of the previous bar, and each bar closes at either its high or low. So every range bar is characterized with the same price movement, the price increment. So it's the preset price increment. And its closure takes place at the range high or low, regardless of where it was opened. Remember. So if you want to show the price movement by the specific number of ticks up or down in the chart, then you should set this value in the period of the range chart. As well as Renko, the range bars display the price in a combined form, so reducing much of the noise that occurs when prices move back and forth between a narrow range to a single bar or two. Yeah, because if we have this range, for example, let's say this, no. Let me just grab back my cursor, zoom out. This range here is 50 pips each, 50 pips each. Down 50, up 50, down 50, up 50, down 50. But it doesn't mean it lasts, for example, 4 hours or 4 days. No. This means only that the noise that was in produced by the market inside of this bus when the price moves back and forth between a narrow range can be limited to, let's say, 5 bars here. If you put let's say, for example, okay, let me just place a rectangle. Let's see if it works. Let's just do the rectangle. Okay. Where is my, there you go. This is my, I'm trying to make a rectangle here. Or eclipse, doesn't actually matter. What I want you to show you is that if I move this, let me just drag it and move it here. So that's my candles. Let me switch to the candlesticks. I don't know, 1 hour, whatever. Let's see if my still be there. There you go. You can see we got 5. We got 5. Yeah, there you go. We got 5 range bars, and look how many of the bars is here inside of this, let's say, eclipse. Let me just zoom out. Yeah, that was our range. Plenty of them. So that's the difference, as you can see here, between range bars and the standard bars. We eliminate all of this noise. We eliminate all of this noise. We only want to see the movement of the predefined number, which is 50 pips right now. And that's only 5 bars. All right. So as range bar charts eliminates much of the noise, they become very useful when it comes to drawing trend lines, right? So let's say the trend lines must be drawn by hand, right? So the main benefit of the usage of the range tab of the charting is viewing the price in the combined form, because noise is mostly eliminated to fit 1 or 2 bars, as each next bar won't be built until the specified price range is satisfied. This is why the trend lines are very often used for these charts. The support and resistance can be highlighted with the horizontal lines, trending periods can be highlighted with the up and down trend lines. Okay, so what do we have here? For example, when we use this, let me just zoom back in. Yeah, we got the 50. We got the 50. Let me just do this using the horizontal line first. Yeah, so we got resistance, we got support. And what we see is this on the chart. Yeah, 50 pips down, 50 pips up, 50 pips down, 50 pips up, 50 pips down, and then we got 50 pips breakout. Okay, and this is very much you can move it a little bit lower, yeah, to be exact. Let's say this one, and you can see straight on that there's some kind of a directional movement about to happen here on the euro dollar. You can see that in the background there's a down move, and you have the breakout to the downside here. So you basically might expect that the market will continue to move to the downside as well in the nearest future, right? So that's the one thing. You can use the horizontal lines. The other rule is that more often the price is testing either support or resistance, then the range of the breakout is higher. Okay, then basically the more powerful the move may appear when the price breaks through. Okay, so when finally price breaks through 50 pips, then we have 50 pips, 50 pips, and 50 pips lower, right? So we went over 200 pips lower after the breakout, right? And then of course we got some kind of a pullback, we test the breakout, and then we are rejected again, right? Now please take a look at this price behavior here. Let me just show you something which is directly related to the trend line, because from the lows of this line we can get our trend line here, and because we have a clear movement of the 50 pips on every range bar, we can clearly see the rejection, the breakout below the trend line, and then extension to the downside. The trend line breakout is a very effective technique to use on range bars, which is why it's a lot of traders and analysts use this one during the analysis, during the trading, using the range bars basically, right? So let's take a look at this one, for example. You got very steep trend line here. It doesn't mean it's wrong, of course. It's just very steep. And now let me take the trend line. Yeah, that's the low. Now trend line, please. Trend line, thank you. That's the low. I can't can't grab the trend line anymore. Okay, vertical line, thank you, and the trend line. And there you go. So let me just get rid of the vertical line. So the trend line will be made from here to here. Look at this. We can even zoom in, move it a little bit there. We can zoom in, move it a little bit here. So you can see clearly how this market keeps moving. Above the trend line, above. Oops, breakout, test, down we go, right? Very nice example of how to use the trend line breakout on the range bars, basically, right? So it's very easy, guys. You don't need sophisticated algorithms. You don't need sophisticated indicators. All you need here to interpret what's going on the market is trend line or horizontal line. And of course, the correctly adjusted range bar chart, right? You can of course have channels as well. Channel means the price channel is over two parallel down or up trend lines, right? And you can of course use it when you analyze the markets or trade it. But the biggest pro of a range bar is that the information displayed on it is directly relevant to the actual trade. So when using a time-based technical signal like candlesticks, your trade is late by the definition. Okay. So because the price footprint must first occur before you see it. So the traders who prefer range bars, because unlike a time-based signal or chronology-based signal, a range bar is the actual price parameter, a symbol that been established over an unidentified amount of time. Okay, for example, a 10 pip range bar candlestick shows the trader a definitive trading range. A break above or below this range isn't a violation, but a price expansion, right? So when you, of course, got, let's say, let me just find some nice example here. You are not reacting to the let's say time-based market behavior. You are basically reacting straight on to what the market is doing when it's trading by the range. When I apply this trend line here, let me just zoom out because one of these dots is gone. There you go. When I apply this kind of a trend line from the top through this level here, let me just apply it correctly. There you go. Maybe something like this would help. You can see straight on. Let me just delete this one. Let me just delete this one. Look at this. Top, first point here, and in the future we got another touch. That's the third point. So this is very important trend line on the euro dollar right now. And this is not time-based service. This is 50 pips range bar on the euro dollar. So every of this pip is only the certain length of the market, let me say, a certain range of the market that needs to be covered. Sooner or later, time doesn't matter here. Only the distance, only the range. So once we covered the range, we hit the trend line, and then there is resistance to the reversal. Sorry, and there is a resistance because there's a trend line, but then there is the reversal to the downside. So that's the one of the most important things that traders like in the range bars. One of the most important things that characterize the range bar. One of the most important advantage: reducing market noise by eliminating the insignificant price movements and providing a clearer view of the price action, equalizing market volatility, because each bar represents a consistent price range, allowing traders to gauge volatility effectively, and you can easily identify trends and reversal because range bars make it easier to spot trends and trend reversals, as you've seen. And the consistent bar size can help traders to stick to a disciplined trading strategy. Okay, so you basically use your strategy in order to follow the, let's say, 50 pip bars only, and you open and close the trades only after the bars moved 50 pips in your direction. If you're short or if you're long, it depends to you, of course, and your analysis that you have done, right? What kind of let's say what kind of price action setups you can use, okay, when you analyze using the range bars, right? So you can of course do the trend identification, right? Because a series of the, let's say, ascending green range bars is an uptrend. A series of the descending red range bars is a downtrend, of course, obviously. Chart patterns like higher highs and, for example, higher highs here and lower highs and lower lows. Classic example of the downtrend. Not a problem to use with range bars. Support and resistance. Yes, you can. These levels are often clearly defined by price congestion within the price bar, so we can see straight on where is the resistance here on this chart. As you can see, there is no resistance here whatsoever during this up move, ascending up move, for example. And of course, by using this, you can base your entry and exit points, right? You make decision on these levels. And the chart patterns. Range bars can make chart patterns more conspicuous, making it easier for traders to recognize patterns. For example, what kind of patterns can we recognize? A double top, double bottom, flag, pennant, head and shoulders, for example, and stuff like this. So you get at least 3 different price action setups when you analyze the range bars. And the last thing for today, what are the range bars trading strategies? Well, definitely you should remember that there are, let's say, 3 range bar strategies to use. One is range breakout strategy. So when a range bar closes above or below the previous range, it can signal it can signal a breakout. Yeah. So this is the range as we spoke about it before. Let me just show you guys. This is the range. This is the downside breakout. Okay. So that's easy. All the same applies to the upside. Range reversal strategy. Okay. How to identify reversals by recognizing key patterns. Double top, double bottoms, and stuff like this. Yeah. So, for example, let me just take a look if I can find double bottom, for example, or double top here, anything like that. I think that one of this is here. This is the very powerful. This is the double bottom. This is like a kind of a triple bottomish pattern, and then you have a big, nice reversal. This is a reversal pattern, and this is the reversal in the price. Okay, so we can see it here, and of course the next trading strategy is trend following with range bars. As you can see on this example, we've covered this example plenty of times. This is a clear trend following strategy to be applied here, because what you have is a trend line that you apply. For example, let me just do the trend line here. I don't know if market will allow me to do this. Let's say vertical first and then trend line here, and then click it here. You see this? There you go. Oh, maybe here, like this. Trend line is here. There's a breakout, so we have a part of the trend line breakout strategy, range breakout strategy, and then trend following strategy. All 3 of them are here. Moreover, what I see here is a pennant. So if I take, let's say I will take this trend line again. Let's see if this will be possible to do it. There you go. I will just move it, let's say, from here, and the pennant will be here. Okay, you see the pennant? So you have the pennant, you have the upper trend line, you have the range 50 pips, you have the breakout out of the range, out of the pennant, and then you ride the trend. Very good example how to use the range bars in practice while trading, basically. Very nice example on the euro dollar. Thank you very much, euro dollar, for showing us this opportunity. And of course, please notice the fact that you can still have this trend line for your further analysis. This is still a valid trend line. So that trend line can provide us technical resistance, but if there's a breakout and then there's a breakout above the trend line, break out of the range, well, that might be some sort of the market movement you might want to take a deeper look into when it happens, if it happens, and when it happens. If you are using the range bar, in our situation, we are using 50 pips range bar, of course, right? So that's everything from me for today. Thank you very much for listening to this webinar. Thank you very much to participate in this very short webinar explaining how to apply and how to use the range bars. In our situation, we've been using 50 pips range bar using the euro dollar. Very simple analysis, very simple setup. If you master this, then you can go, of course, you can go level higher, one level up or even two levels up, and apply some more advanced trading strategies using the range bars. Thank you very much for watching this webinar with me, and I hope I see you guys next time, next week, same place, same time, with another Become cTrader Master webinar for your disposal. Take care, guys, and bye bye.